All right, well, let's kick this off. Thank you, everybody, for joining us here today. Here to introduce really an amazing program that's tailored to you out there, our clients that are multifamily syndicators, apartment owners, buyers, management. We're here to help build your bottom line and create some more profitability, new revenue streams, which is always nice, especially them passive revenue streams. But we've got a really great group to talk to today. You know what? I don't think I even asked this. Our lead is Doug Keys, the main man, putting all together an insurance program that you can actually benefit from. The company is called Y-Rig. What? Y-Rig?
Your Renters Insurance Group.
Your Renters Insurance Group. I like it. Well, Doug, maybe you could just tell us a little bit about your background to start with, and then really, main thrust is how can we benefit everybody that has apartment interests already?
Sure. Been in this game for about 38 years. And we've always set up what we call producer-owned reinsurance companies, where the producer actually generates the policies. We've always believed that they should get the lion's shares of the profit instead of the insurance company. So we have a unique mechanism that shares or lets them have the majority of the profit versus the insurance company. I started with Aon Corporation way back in the 80s. Teamed up with Jim Smith, who is my partner in this also. Very knowledgeable, great partner, owned an insurance company, owned administration companies. I teamed up with him in 91. Had a home warranty company where real estate brokers, mortgage companies have their own program. And I have some really experts in this, from Jim Smith, Mark Anderson's our attorney and expert in tax law, Mike Rogers of Risk Services, sets up insurance companies all across the United States. I've really got a great team. So we wanted to bring the same concept to property managers, property owners. And I was reading an interesting statistic last week. 51% of U.S. corporations today have a captive reinsurance structure. And I thought, well, why doesn't property managers have it? Everybody else does. So we started working on this a few years ago, and it's now come to market. Our beta test started in October, and it's going over great. I mean, I'm getting 3-4 clients every single day signing up.
Phenomenal. 3 or 4 clients in terms of not the renters, but property owners.
Yes.
Or property managers that are interested, and how they can also benefit from the renters insurance. Could you tell us really who's the target buyer? Who are the interested people that want to work with Y-Rig?
Well, it can be property owners or property managers. A lot of our property owners own their own property management company. They're one of the same. So property owners typically require the property manager that before a renter moves in, it's your job to make sure they have $100,000 of liability. They don't really care about the renter's content. They just want to make sure you burn my kitchen down and 2 apartments next to it, that I have that liability coverage. So they require the property manager to have that. So it's really the property manager's job to make sure that before a renter moves in. I would say the majority of our clients are the property manager. So especially like single family homes, we have a large block of business for single family homes. But a property manager managing 2,000 single family homes could have 1,500 different owners. So we're no way going down to each one of them owners. They just want to make sure that policy is in place. So I would say most part is going to the property manager. Now, a property manager saying, Doug, I manage 30,000 doors, and I have 3 owners of these 30,000 doors, and you're showing me all this money. How does that involve the property owner? Well, I'm going to give you a barrel of money, and if you have a property that owner, you've got that relationship. Yeah, I would probably talk to them about it, because you don't want to make make that property owner upset. Might as well be open to it. So I don't tell them how to spend their money. I kind of leave that up to them and that relation to that property owner. Or if a property owner comes to us and I own, 10,000 doors and want this program, well, real simple. You have it, and you tell your property manager, enroll all the renters under this program. So we work with either one.
Makes perfect sense. And I could definitely see where a property manager can just offer their property owners, their clients, a discount because they are having the additional revenues that frankly makes them way more competitive in the market across the board. If it were a property manager that is working with you and they just add another property, they brought on a new client, how easy is it to expand their insurance company to incorporate additional properties?
It's going to be all their properties that are under management. So
I guess what I mean is like every couple of months, some properties get added on, other properties get terminated.
Yeah, so when they send us the weekly file, here's the renters that moved out, here's the renters that moved in, these are taken off, these are put in. So they send us that file feed. So they know exactly what that invoice is going to be. They have an exact a list of all the renters of what are enrolled in it, who came on and who came off. So that's all detailed.
Perfect. Well, the other side of the token on there, if and when the property manager has a claim, how does that get computed or paid, or what's the process?
A security deposit, where I touched base earlier, that's just posting that information on our website, and we issue the check to the property manager. So our security deposit is a insurance policy issued to that property manager. On the renter's insurance, we do not want the property manager involved in that. So the renter's really just going to call our claims office. I had one yesterday. House got struck by lightning. All right. Well, start putting all your receipts together. What was damaged? Our claims adjuster takes that claim, approves it, authorizes, sends us the receipts. Here's a check. Go buy new items. So that's all handled by us and our claims center and our adjusters. It does not involve anything with the property manager.
Perfect. Well, thank you so much. I love it. And I love you brought up the security deposit insurance, which that sure is unique. Haven't heard anything about that. Property owners and managers owning the insurance company, nobody is doing that in the market. Well, I take that back. You're doing that in the market.
Yes.
Basically, almost exclusively. I didn't see you as a monopolist, but now I do. You're the man.
We're kind of the only game in town. So for confusion, the lack of confusion, what we're actually insuring that property manager is. So we're not insuring that renter that we're going to cover the damage he makes. We're not going to insure that renter because he wants to skip out on rent. We insure that property manager for the renters that do not pay their 12 months rent payments, or the renters would do not pay the excess wear and tear and damage they cause when they move out. So we insure that property manager for that. So it enables them. I have a lot of property managers where they want to advertise, no security deposit required. The rent goes up $28 a month, but they get advertised, no security deposit required. My multifamily, especially in the Midwest, some of the security deposits are quite low, $300, $400 to move in. Well, the lower you have that security deposit, the bigger the collections, the bigger the bad debt. So I can take for that same fee that renter pays for that $350 security deposit, put it in a low monthly payment, but I take the property owner now, instead of $300 security, they're getting $1,500 or $2,000 worth of security deposit benefits. So property owners just love it. They get a lot more security. Renters love it because it's a low move-in cost, makes it simple and easy. Property managers love it. They get advertised, no security or low monthly pay. They don't have to manage the accounting for the security deposits. They don't have to get in the arguments with the renter. Why didn't I get my security deposit back or not? So we make that claim process very easy for the property manager. They like that as well. They ask questions like, if Doug, a renter moves out and I got $1,000 of damage, my job is to get that apartment fixed or that single family home fixed and get it back on the market and get a renter. I'm not going to wait a month or 45 days to get my checks. We make it simple. They just log into our website, give us the evaluation report, give us the estimates, give us the pictures, give us the contact of the renter and the contract, and we pay them in 48 hours. Now, we will contact that renter kind of as a mediator. You have $1,000 of damage. Is there a reason you did not pay this? Or give us your side of the story, because they're still responsible for that $1,000. Some will pay, some will not. The property manager, the property owners are make whole because we pay that. And then whatever we collect from that renter, being 20 cents on the dollar, 40 cents on the dollar, whatever we collect, we put that right back into our client's bank account. So,
love it. So, if you don't mind, if you could clarify in my mind and anybody watching here, so many of the multifamily owners, we require the tenants to have renter's insurance. Make sure that any of the damage is covered. Any of those other issues are covered. Is this more of an in addition to that, or would it be a replacement of it?
In addition, so your renter's insurance, and then you have security deposit. That's the two things every property manager is going to require. You have to have rent insurance to move in, and you have to have a security deposit. So on the renter's insurance, the renters is given a simple option on a lease addendum. I want just the liability, for example, just liability, the minimum required in $5,000 of my content for $12 a month, or I want $20,000 of my items covered in content replacement and $100,000 liability for $18 a month. So they'll simply check a box. It's part of their lease addendum. The property manager just collects that in with the rent, and the renter's policy goes active. So we can issue the property manager a master policy or a CLIP policy, which says we're going to insure every single one of your renters that are enrolled in this. So they make it very simple and easy for the renter, automatic. We don't screen every single renter, to go back to security deposit, for example. There are other companies doing security deposits, obviously. There's Obligo, Lease Lock, Rhino, Surety Bonds, and we're all functioning kind of the same way, except the difference is the ownership and who gets the profit. But we don't screen every single renter like some of our competition does. Does this renter qualify to get a $2,000, weighs $2,000 security? Let me run the credit check and background check, and I'll let you know in a week if you qualify or not. We don't do any of that. We look at the whole book of business for our client. And we interest of the law of large numbers. They'll look at your whole book. What is your excess losses? What is your loss rent? What is your collections? What am I insuring? So if the renter qualifies for them to be a renter, then they qualify under our program instantaneous. So we make it real simple in that way also.
So that I understand. I'm a property owner. We take security deposits. We require the renter's insurance. It's just, we have the money set aside. We're legally required to let it just sit in an account. We can't even use it. The renter's insurance, the premiums get paid to an insurance company. We're never seeing any of it. What I understand, YRIG, you're setting up a program where the property owner, the property manager, actually benefits from the renter's insurance and really the security deposit as well, because now all of a sudden you're getting the premiums instead of just having cash sitting there.
And 90% of the premium we collect, or you collect in your rent, submit to us, 90% of that's going to your bank account. Right now, zero is. So by the time you take out the fees and take out your expenses and take out the claims, roughly 38% of that premium is going to come down as profit. Or in simple terms for a property manager, roughly $300 per door per renter.
Not bad.
And it's pretty predictable. So, this is meant for the larger property managers. we look for $1,500, 1,500 doors in the minimum. So the larger it gets, the easier it is for predicting. It's very hard if a property manager with 200 doors, it can vary. So most of our property managers probably vary from 8,000 to 15,000 doors on average. I do have two groups of smaller property managers that came together and formed their own group to qualify for that number, and we're fine with that as long as I've got that one group, because we insure a segmented cell. So the question is, what is my risk if my claims go haywire? I have all my renters burned down all my houses. So I have my bank account, that bank account goes to zero and I have no money there. Well, they're not insuring it. So their captive insurance company is not issuing the policy. They're not insuring it. They don't have any risk. They don't have any liability. So we want to remove that because it's my company that insures it. It's my company that issues that policy. So that's usually the first question. What is my risk on that? They don't have any. So we've removed that. We use a captive reinsurance structure as a means to distribute income, distribute the benefits or the underwriting profits through a captive structure. It's unique in that way. I can't take a property manager and say, I'm going to pay you X amount of money for every renter that's enrolled. It's illegal. It'd be a referral fee, kickback fee. You can't pay them commissions. There's not a licensed P&C commission. So you can't do any of that. But if I make them an owner of a captive reinsurance company and I fully reinsure that to remove their risk, they now get 90% of all the profit.
I love it. Is just so that I'm clear, is the 10%, is that the cost of the reinsurance or is that the Y-rig administrative cost? Who pays the reinsurance?
Since we have a segmented protected cell, so every client's cell, their position stands on its own. Nobody else shares in anybody else's losses. To have that, you have to have a minimum of a 10% sharing of risk by law. Okay. So that 10% is one, sharing of risk, and two, we constantly have to add capital to our insurance company. Mm-hmm. So we keep 3 times the amount of reserves as average claims to satisfy the insurance departments. So that 10% coming to us is constant capital being put into it. It also satisfies that sharing of risk.
That makes perfect sense. In terms of, well, if that's the sharing of risk and that's going into the capital and the reinsurance, that makes sense. With the 90%, what other, and it sounds like there may be profits of 30, 40% still, which is phenomenal. Just so that people will understand, what other things are they required to do or responsible to do or pay for? Or is it really just passively managed so they don't have to stress so much?
There's really nothing for them to manage. So we do everything from A to Z. It's our claims department. We adjudicate the claims. We do the collections from the renter. We file all the tax returns. There's board, bureau, and tax fees. That's your stat reporting you have to do with every state. Everything for the management of that insurance company. So when you break down what are the fees to actually run an insurance company, it's about 30% of that premium. Mm-hmm. So that pays, all the fees for that. So that 30%, I pay 10% of that 30%. They pay 9% of that 30%. So it comes down to basically 63% ends up in their bank account just for claims. Claims run 20 to, renter's insurance, they'll tell you 18 to 20, 25 on the high side. Mm-hmm. If I take that 63 plus the 12 that I reserve, I have 75%. That's 3 times the highest loss ratio you're going to see on renters, to make numbers. But that's how the numbers break down, or where you're going to come into about 37, 38% of that premium collected.
Again, I'm like dumbfounded how brilliant this seems to be. Economies of scale. The little guy has to sell somebody else's insurance if they're large enough, or if they have the ability to combine with other property owners or property managers, they actually become more profitable by being able to own the insurance company. At the end of the day, is that all we're talking about?
Yes, we make it very affordable entry point. So the only investment where they belong to Wiring Association because we insure the members of the association. Mm-hmm. They're issued preferred stock in a British insurance company. It's a $10,000 investment. That's the only risk they have. If everything went haywire, yes, they could lose their $10,000. But for someone to go out and say, I'm going to do my own capital, my own captive, and do my capital, you're talking millions of dollars to enter this game. So it's a very small initial investment. And I tell our clients, if you're nervous about the 10,000, don't even write me a check. Get started. I'll show you your bank account in 4 months. Then you tell me if you want to write the check or not.
I like it. And you know what? I do know personal experience dealing with clients. The captive insurance always seems like it costs like 50 grand, give or take, once you pay the consultants, getting things arranged, actuaries. I mean, if anybody's afraid of $10,000, well, they shouldn't be managing 8,000 doors. That actually seems like a massive discount, if you'd ask me, from what it normally would cost to do it on your own.
Yeah, the key part of that policy is issued by Wiring Risk Retention Group, our insurance company. So we're issuing a policy. Their captive's not issuing a policy. They're not named as the insured, so there's no liability or risk there. That all falls on our shoulders.
And I think that's really important to note. Another experience that I had, and you're actually solving it right there, had a client that had captive insurance, and then the claims started rolling in. They did it for health insurance. A couple of people caught cancer, and it literally bankrupted the company, how massive the medical bills were. So having an actual insurance, reinsurance coverage, really, I think you have to have that. And that sounds like exactly what Wirig is helping put in place.
Yeah, if the captive, in that case, the captive did the insurance and they ran out of money, those claims aren't going away. They're going to be suing the personal owners of that captive to make those claims good. But in that case, that captive issued that policy. The captives of our clients they own do not issue that policy. So they're not named anywhere on it. They get to sit back and collect the profits from it.
Love it. Could you kind of walk us through, okay, I've got a bunch of doors. I'm interested. What do I do from here and what should I expect?
For us to set a client up in the system, it takes only about a week or 10 days. Pretty simple. They're collected in the rent. It's just a simple file feed they're going to send us. So that's pretty easy to set up. On the security deposit, I have to analyze your book of business. So the numbers, the numbers you'll provide will be, in the last 3 years, give me all the losses you had for excess wear and tear. Give me all the losses you had on lost rent. So I can analyze and how many renters moved out in 2018, 19, and 20. So I'm going to come up with a number is what is on average when a renter moves out, what is the excess wear and lost rent that you lose per renter. So that'll tell me the premium, what's the right premium to charge for you to charge that renter and to what profit you want left over, obviously, too. So that takes a little time for them to pull that data. I mean, it's not real hard. From there, there's a couple contracts they sign. I set you up in the system, and they're off to the races. Most of them do it by a file feed. They don't have to. The reason they do it by a file feed, we're allowed to pay an administration fee to that property manager. It's not a commission. That would be a violation. But an administration fee, and that is paid for the collecting of that data, collecting of the premium, and submitting it to us. That's an administration function they're doing. So on renter's insurance, we pay $2 a month, and that is a file rate in all the states. State approved to pay that $2 for that service. On security deposit, we pay $5 a month for doing that same service. So when they're on both programs, they got 1,000 doors, for example, they're getting a check monthly for $70,000 before you even get to the reinsurance money. And I have clients that they just love the 70,000, which is just icing on the cake. You know, the real cake's in the reinsurance.
I absolutely love it. And you brought something up I wanted to ask you about. Who determines the premium rates?
On the renter's insurance, it's set and determined by each insurance department. You know, those are file rates there. Our security deposit is file rates also, but we have an A, B, C, D, E, F risk. And what that risk is to what that data they give me, to what those losses are. There's no guesswork in it. What I like about when I do a pro forma and I take their exact numbers for 3 years, you know, our property managers say, Doug, it's a pro forma. You know, you can put whatever you want in there to make it look good. And no, I'm going to use your exact numbers right to the penny. And I will show you where every single penny goes. So if you were on this program for the same 3 years, X amount would be your profit. And when a property manager looks at what those numbers are per renter moved out, you'd be surprised and see how consistent that is year over year over year, which makes it pretty predictable. So when we take that and I want to reserve my insurance requirements for that state, I need to reserve substantially more than what I expect to be claims, 3 times the amount, right? That's required. Well, you've got a lot of money left over after claims are paid. That's what comes back to them.
I think that's really interesting. So really it's the states that are controlling what the premiums are. The only real discretion that YRIG really has is to help the property owner, meaning the insurance company owner, determine kind of the category of risk of a potential renter.
Yeah, I mean, renter's insurance is very, I mean, this product is great in our world. You know, we've been doing home warranties and auto warranties and various auto products. And in that world, we live of that reserve account, 65, 70, 75% loss ratios. When you get into renter's insurance and you look at national averages, 18%, 20%, very, very low in the insurance world. The other part of it is you have a property manager that requires it. So the capture rate is so high on this that for the renter, just check this box, include it in your rent, and we collect it. It makes it so simple and so easy for them. Now, you can go shop your renter's policy. They have to have the option if they want to buy the policy from somewhere else. Go shop all you want. You might save $1 a month here or there. They usually don't because the rates are, you know, pretty close to everybody what those are filed. Now, some of you might be with like Geico and you've got your auto insurance and health insurance and life insurance. You got a lot of other programs, you get discounts along those lines. But the policy is a fairly cheap policy and the cost to all the carriers are pretty close to each other. So it's all about convenience for that renter. They don't have, you know, check the box and I'm done.
It seems like it's a simple concept to just work into your leasing system to add more revenue streams. It's what's the downside? What's the problem here?
I keep asking that for all the clients I talk to. Punch some holes into it. I haven't found any really. I mean, it's really going over extremely well. Most of what I always hear, well, you hear something's too good to be true. There's probably a hole in it. Where's the catch? Where's the issue? It's kind of self-explanatory, especially when you pull their numbers. There's no guesswork in it. So yeah, I haven't seen any downside yet.
I absolutely love it. I mean, it just seems like it makes so much sense. You're requiring it anyways. Why don't you get paid for the requirements? For the tenants, they're going to be paying this regardless. It sounds like the categorical kind of the rates are dictated by the state. So even if there's a little discount here or there, they're not going to get anything any easier at all. It sounds like a great situation. And now it's just a matter of working with the groups that have sufficient doors, or B, and I'd like to turn in a few minutes to some of the guys that you work with that can really help with that as well. But I did want to ask, you have anything else that you'd like to share? Because it is an amazing program and we want to know as much as possible.
Yeah, for what they're doing now, it's an expense. I mean, it costs a property manager to keep the accounting on that security deposit. It costs the employee expense to get those arguments with that renters under the security deposit and the accounting of it. There's an expense to manage all that. So there's no profit in the program they're doing now. It's just an expense.
Yep.
We remove all of that. The other issue when you're dealing with a multifamily, when they have a low security deposits mean higher collections, mean higher bad debt. And that bad debt's going to go back to that property owner. So when you tell a property owner, no longer $300 security, I'm going to insure you for $2,000. And I've got a client now that it's $1 million of bad debt they write off. Said, okay, I'll make that $1 million go bye-bye. And here's another $6 million in profit. That's what the numbers come to for the same exact amount the renters are paying now. It's really once they see it, I've got a great marketing team, which you're going to be introduced to a couple here. They do a great job of getting the word out there to the property manager. And we get on a conference call and let's talk about it. And then I share everything. We're an open book. I show where every penny is. So we're looking for a great 2022.
It's exciting to know. I know that you've just started rolling this out. It hasn't been available in the market. What if, for the interested people that are watching, and really everybody that we work with should have an interest, if not individually, if they're not large enough yet, there's some opportunities to combine people. Just really wanted to thank you because you're opening up doors that nobody knew about before.
Just not in this industry. It's going to be new to this industry, but 51% of all the other corporations already have it.
Well, there you go. Thank you so much for doing God's work there, Doug. Really appreciate your time. And I am going to chat it up with your marketing guys for a little bit so that they can share a little bit as well, if that's okay. And you know what? With that, Daryl, it's time for us to chat.
I'm going to sign off. Nate, thank you again.
Thank you, Doug.
Thanks, Doug.
All right, Daryl, the man with the plan, along with Chris Huddle, hey, Chris, say something.
Something.
We're just going to ignore you because you're not coming through well at all. So nice seeing you, fuzzy like.
I'm just going to mute myself and walk around the pasture.
Good going there.
That's great, Chris. Great.
Well, Daryl, maybe you and Chris, y'all are the main men. Y'all are the partners on the marketing and working with Doug, really getting this product out to the world. Could you tell us a little bit more about kind of what are you doing and how are people, again, I know that the target is really the larger property managers and the larger groups, but I didn't want to bring this up with Doug, the fact that you're actually helping the smaller property owners come together so really everybody can benefit.
The way the program is structured, when we go out and we start talking to the property managers and to the property owners, what we want to emphasize to them is that this is a turnkey operation. It's very simple to set up. It sounds a bit combobulated sometimes when we start talking about corporations and how it's in insurance, because people know a little bit about insurance, but they know enough to be confused. And so we try to keep it a little bit simpler when we start talking in these realms. The first realm is that we have the smaller property owners and the smaller property managers. So when these property managers, we're looking at their bottom lines and they have the same problems as the large ones, they just do it in a smaller scale. So when you have somebody that has 200, 500, 1,000 properties that they manage or they own, we can be able to combine those with similar like property managers and owners in a corporation, and they're single-celled accounted for. So each cell is accounted, so your numbers don't get mixed with anybody else's numbers. And so you get the same kind of benefits as the larger guys out there, but you get it with how many ever you have. But we get to show you where every penny goes in this program. That's what I like about this program more than anything else, is that there's no dollars and cents to be hidden or seen or anything else. We take all that away from you. The reason also that we have it structured that way is that you don't have to license everybody out there to be able to participate in this program. Your property managers don't have to be licensed. You don't have to be properly licensed if you're an owner. So consequently, we take that away from you. We do this on a turnkey basis. So we come in there, we help you do the analysis when we start gathering information on it. We go forward with, once the information comes through, we can set up the time and place to be able to set it up, make sure all the paperwork's done correctly, make sure that when you start doing the presentations, we do some training with you and to be able to, just like you do right now, if as you have a trash addendum in there that you have the trash picked up, then by golly, you're going to have a trash addendum in there to be able to show that you're covered if anything should happen, if you burn down the apartment or the one next to it or the one above it or flood it, or some of those wonderful things that happen. And on the second part of it, the really interesting, great about this program is the security deposit program will come back in. And if you have a property that needs to get rent ready quickly and your tenant has torn it up, they skipped out in the middle of the night and all the rest of it, you need somebody to come along and help you get this back on the marketplace and get it out in so you can rent this property for your owners, because nobody likes to have just an empty unit sitting there that's not in that. And that's what this is all about. So if they have a debt they haven't paid, we help you collect on that side of the fence, and all that money goes back to you. And on the other side of it, we get it ready where within 2 to 3 days, we can have that money in your checking account, and you can go ahead and make that apartment repair and get it ready and get it back on the marketplace. So the ease and simplicity of this is we help you explain all the paperwork. We help install it very quickly. If there's anything that needs to be any kind of training or anything else, that's where we come in. And the last part of it, we watch the numbers like everybody else. In fact, you can even get to the numbers on the internet and you can see 24/7 what your dollars and cents are doing out there. So that's our part. That's what we do. And we try very much to be able to go forward with it.
What is the time frame to implement? If, hey, I'm interested, where do I go from here and how long is this going to take?
Well, you have in your records, if you're a property manager, what it's cost to be able to take care of your properties over the last 2 and 3 years. So what we're asking to do is on a monthly basis of what it costs you to be able to get, if you have a security deposit situation, how much you spent in that security deposit to make your apartments rent ready to be able to put it back on there, and then to be able to go forward from that basis. So that's what we ask right up front, is we want to be able to get that information, get it into our hands. We'll do an analysis on it. It takes a couple of days. And to be able to then go forward and say, okay, we have the renter side of this policy, and everybody knows what that is. It's, it's the liability side of it. And then we have the security deposit side of this. So it takes a couple of days. Then we come back and make our recommendations. We have a tier system. It's an A, B, C, D, E tier system. And we want to see where you are in getting your properties ready. And then the second part of this is being able to get the right rates so that these rates cover. So if you have an apartment that you have a $2,000 rent factor on, then we want to make sure that you have a $2,000 rent factor that you can come back and be able to use that kind of money to be able to get that apartment ready. Now, if it's an A tier, it could be as low as $22. If it's an E tier, it can be as high as $52. So we want to make sure that that is what we're trying to dial in here, and make sure that the dollars and cents make sense, and you can be able to tune into that. One of the great factors in this is that you're going to have this kinds of funds available to be able to go forward. And in the past, it was the security deposit was hopefully paying for it, and you had enough there. Here, these are insurance group rates that you now have each individual unit insured to be able to make sure you have funds available to make sure you can make these repairs.
Perfect. Another question that I had. So if I say I'm interested in moving forward, I've got 1,000 units, but the reality is it's a year for a good portion of those units to turn over, but everything isn't.
Mm-hmm.
So is this kind of just a long-term relationship of a slow roll in building of the various policies?
One of the nice things that happens here is it takes, once we get all this information gathered, it gives you a couple of days to gather it. We see it takes about, decide to go forward. And 8 to 10 days, we install it. So let's either start on the 1st or the 15th of the month. And then what happens here is that we know that if you have 1,000 units out there, that every month you're going to have about an 8% or so turnover. So about 8% a month are going to be presented with this, and you can put it in there and all the rest of it. We have very strong parts of the renter cycle, which is the first of the year, beginning of summer, and September 1st, because of the school activities that go on out there and people want to be in the right place at the right time. So it does take about a year to roll everybody into the program on the renewal basis and for the brand new move-ins on this. So yes, it is a slower building program, but once you're in that program, this is your dollars and cents. These are your money. These are your monies. So what we try very hard to do on this is to make sure.
All right. Unfortunately, Daryl, you just froze, but that's okay. In the interim time, we have something even better. Back to Chris, who is now
period of time, these are
feeding reindeer. You froze up there for a minute. So we had one of those halftime breaks to just watch the deer.
When a deer's looking at you right in the eyes, you're just kind of going, "Oh my gosh!"
And now we turn to
Here is Rudolph. I've been around these programs, like Doug says, for over 30 years. And with these kind of programs, when we are able to install them and go forward and be able to show you how you can suddenly produce a profit stream that you never had before, and the ease of what it can be done with, that's our job. Our job is to make this as easy as possible. We'll meet with you, once a month or once a quarter, once a year for the overall picture of it. That's what we also do to show you where the dollars and cents are going. And when distribution starts happening, we make sure you get your checks. So that's all pretty important. People really enjoy, profiting. So let's get our check. So we are
number one.
Yeah.
Pay the check.
And number two, we're all overseen by the state of Texas and also any other state that we operate in. I just happen to be in the state, but we operate in all 50 states, and we're licensed in all 50 states to do this. Every single one of those states oversee what we do. So we have to go through their audits. We have to go through the IRS audits. We have to make sure that your dollars and cents are spent correctly on it. And we go by all the rules and regulations. And that's why we have to account for every penny and where they go.
I love it. Well, unfortunately, we've lost our deer show. And it is coming up on the hour. Is there anything else that you can share with us about kind of what are the next steps? How do we get a hold of you?
What we need is to be able to have a brief conversation with you. That's why you need to hit all the information that's down below and be able to help us be able to go forward. We'll set an appointment with you to be able to get some necessary beginnings information. Once we do the analysis, we'll contact you again and we'll set up a time that we can be able to have a thorough review of what's going on here. And then if you agree with that, then we set up dates to be able to go forward and get the installation going and making sure all the paperwork is completed. It's really quite simple. There's basically 4 different pieces of paper. And as was mentioned before, don't worry about the dollars and cents up front on that. Let us work for 4 to 6 months. Let me show you your bank account, and then we'll talk about any fees or anything else that might be associated with this. We just want you to get started. We want you to be able to see the dollars and cents. And again, with no liability attached to this other than what's in the reserve fund, and that reserve fund, if it ever runs out of money, that was money you put in there in the first place to begin with, and it runs out, you're no more liability. We can't touch you for anything else after that period of time period. So in this for the 30 years that I've done, I've not one time seen one company lose one dime, and that's why I'm in the middle of this. In fact, I even came out of retirement to be able to go through this program because I couldn't believe that this was finally put together, and it's just a wonderful opportunity to be able for the property managers and for the property owners, especially, to be able to take advantage of.
I absolutely love it. Right now, contact Daryl, contact Chris. Their information is there on the screen. And of course, you need to hit a bunch of doors. That's what we're here to help you do. Reach out to us anytime to help with the securities side, raising the capital, closing the loans or whatnot. But Doug, Daryl, Chris, thank y'all so very much today.
Thank you. Thanks, Nate.